Thanks for joining us, sir, as always.
Good to be here, Nampu.
Good stuff. We see global markets on a good run yet again, with all-time highs achieved in the US, and we saw in Japan as well, doing very nicely. Is this all to do with good market fundamentals?
I think a lot of it has to do with what's been coming out of the US in the past few weeks. Specifically, the much better than expected GDP figures coming out about 10 days ago. Coupled with the realization that the tax reforms that have been talked about for so long may be about to materialize. And we saw Donald Trump talking about this the other day. It's still got to go through Congress. The first part through the House should be fairly straightforward. The Senate might be a little bit more difficult. But nevertheless, that I think has been discounted in the very high levels of the S&P 500 for a while now. That is now feeding into a number of other markets, notably Far Eastern markets, and sentiment generally, I think, is pretty good. So all the worries about the market being very, very high, and it is high, make no mistake. The other thing I should bear in mind, we should talk about, of course, is the fact that a lot of the earnings coming out recently have been very, very good, notably the tech stocks. So again, that's been supporting it. So, you know, it's awfully difficult to find really bad news out there. So markets are high, make no mistake, but the sentiment is good and it's improving. And while that happens, I think the likelihood is we're going to see markets on a bit of a rally for a while yet.
Here at home, we see the all-share index also, rallying, but it's all to do with the Rand hedges, isn't it? Yeah,
mainly. The Rand, it's interesting, I was just thinking as we were talking there, in previous weak spots with the Rand has kind of blown out and then gradually crawled back to round about the kind of levels it was before the bad news. Not this time around. It's fallen and it's kind of staying at those levels that it's fallen to. And I think that's significant because what it's saying is that we're coming up to November the 24th when S&P and Moody's have their ratings review of South Africa. We've got the elective conference, the ANC's elective conference between 16th and 20th of December. And the likelihood is that at some point in time between now and the end of the year, maybe a little bit into next year, we just don't know the precise timing, we're probably going to get a downgrade. That will be a nasty downgrade because that will mean a lot of bonds will have to be, by definition, sold by foreign holders because we'll go into junk status as far as the local currency is concerned.
But let me interject there because one analyst was saying that even though those who are not authorized to invest in junk bonds will withdraw, there are people who are authorized to invest in junk bonds, and that means they'll be getting a return in excess of 9%.
Oh no, you're quite right. What we don't know is to what level bonds will blow out as far as the actual interest rate is concerned. I've seen certain research that's suggesting it'll go to 10.5%, maybe 11% from the current levels. And I think that's probably closer to the mark. Because yes, you're quite right, people are still very yield hungry out there, but there's a price for everything. So if it's perceived that this is a good bet, and there are still some very good parameters in South Africa, there is still a good story to be told here, particularly if we get some reasonable political change in the not too distant future. So I think people who've got perhaps a higher risk tolerance would be looking to buy into South African bonds, believing that things are going to come right and you're going to see bond yields coming down and obviously prices going up. But on balance, I would say we're probably more likely, at least in the short term, to see bond yields rising. And we have to wait and we have to get more certainty coming through on the political and economic front.
Speaking of political, what does your instinct tell you about Finance Minister Malusi Gaba deciding to set up an inquiry into tax administration? I mean, what does it mean, actually?
Yeah, isn't that fascinating? I just heard about that as I was driving in. And, on the face of it, it sounds like he's going against his political master in the sense that he's saying, well, here we have to have a big investigation into SARS. And it's interesting also that it's coming literally a few days after the publication of Jacques Paul's book, The President's Keeper. So, this is absolutely fascinating. Gaba also recently came out quite authoritatively and said, no, we can't afford a nuclear program. And, he sounded like he was his own man. So, difficult to know what's actually going on here. Maybe he's giving out the impression that he really is. He's not a puppet. the Guptas and Zuma and whatever, and that he really is his own man. If that being the case, that is very, very good news indeed. And if that can be carried through, and he can make some, how can I put it, make some tangible signs that that is the case, I think that'll be very well received by the ratings agencies and other observers.
Let's watch this space. Last thing, we've got very limited time. Lonmin, very concerning. They lost a third of their share value on Friday, and they continue to keep losing. Is it going to survive, this company?
Well, this question's been asked for a while now. You know, they've breached covenants with their lenders. They reached the point the other day there where their market cap, I think, reached the point of $1.1 billion, below which the lenders get very twitchy and very nervous. And that's what this is all about. So what they have to do is they've got to try and find some alternative methods of funding. The platinum price isn't really helping them very much. Ben Magara, I think, has done a very good job in terms of, that's the CEO of Lonmin, trying to cut costs and try and work this thing within the bounds that he can do. But yeah, it probably will survive. Look, it's a punter stock and has been for a while now. So you buy it when it's really cheap and everything looks really terrible, and you hope to make a nice profit if and when it rises. But it's not the sort of thing you'd be buying for widows and orphans.
Indeed. All right. Well, thank you very much for your time and your insights, as always, Chris. Well, that was Chris Gilmore. He's an independent analyst. After a short break, Nzinga has more business news for you.